Market started the week of a little muted on the back of Martin Luther King's holiday in the US. We started seeing some moves overnight after the Bank of Japan kept rates unchanged. However, they increased the growth for the year, and that is probably owed onto the sales tax that they started last October, if not mistaken, last November, and that has actually seen the yen strengthening. We are expecting the jobs report in the UK. The UK has been turning a little bit dovish, the Bank of England, to be more precise. We've seen last Thursday, if not mistaken, retail sales contracting to minus 0.6, a very disappointing number. And then we're also going to see, of course, the euro-dollar is FX measures today. And since we have the German geo-economic sentiment also released in a few hours, it makes a very good opportunity to just touch base on those three pairs. Okay, the 2 hour dollar yen, to me, it looks like this last move to the upside looks like a correction. Okay, it looks like an ABC to me. It looks like that we've had waves 1, 2, 3, and 5 ending with an ending triangle over here. Then we went into a 3 for a correction, and at the moment we are looking to move higher, okay, to take out the hold on, there we go, to take out the 61.8 Fibonacci extension, which is over here, right, which goes to 110.95 or anywhere near. To be honest, the 61.8 Fibonacci extension of this move to the downside is at 110.70. So anywhere between this level, which is also a very, very good intersection for a monster multi-year trend line coming down, and also another trend line coming up. In the short term, it looks like we can expect some sort of triangle here maybe as perhaps wave 3, and then we could get another move to the upside, or we could just be on a leading diagonal pattern here with 1 and 2 being a triangle. Then we are going to get 3, a sharp 4, and 5. Pound dollar moving exactly as we expected as well. We've seen the this move ending up here, a 3 actually, and that we're expecting for wave 4. We talked about that move being an impulsive one, then a B retracement at the 61.8, and we talked about the expectation of wave C that is going to go perhaps below wave A. This would respect the tendency, of course, of wave, the third wave being a little bit beyond wave A, which is supporting a correction pretty much. So we can expect that to go anywhere between, I would say, 126.80 and the previous low from wave A. Now, how this is going to turn out in terms of a pattern, it's very unclear, to be honest. It looks like to me this is ABC X, and we could see another ABC. So potentially we could have that turning into a double zigzag or any other sort of double combination. This low should be confirming the validation of wave 4, and then we are going to see most likely another move to the upside before we see another continuation for another ABC pattern to the downside. Let's go on the euro dollar. All of them pairs were quite muted yesterday. Now on that one, on euro dollar, we've ended down here this move to the downside, right? But to me, this is the first wave of an impulsive move to the downside, intermediate one. And I'm seeing this correction as wave 2, and then we should, of course, get in wave 3 with 4 being sharp and then a 5th. At this moment, I'm looking at this becoming an A, B, C, D, and E, so a leading diagonal and then a triangle pattern, because this move looks a little corrective to me, okay? Now, the question is whether we're going to break below that level. This looks like W, X, and Y, to be honest. So we should get another move like this to the downside to complete wave D, and then go up for E, and then we're looking for fresh lows below this previous low. The current structure supports a little bit of an upside, right? So, which really could validate what exactly I'm expecting to end wave D over here, right? We could move as well. I mean, that we could extend down. It simply is a simple move of this trend line, right? So we do not know where this is going to end. However, I've drawn this line based on the previous low, okay? And that's why I'm expecting wave D to end around that level.